Have you ever thought that falling prices might actually be a bad thing? I mean, it sounds amazing, right? Everything gets cheaper. But, well, today we're going to look at what happens when prices don't just dip a little. They start to spiral down. So let's dive into our explainer on deflation.
And to really get a feel for this, we're going to head into a busy market. And lucky for us, we have a guide. Meet Coach Kobo. He's going to walk us through a real-world example that'll make this whole thing just click.
Okay, so take a look at this scene. The very first thing Coach Kobo points out is there's just so much stuff everywhere. The stalls are literally overflowing, and you can see more trucks are pulling up to unload even more. There is way too much of everything. We're talking a serious oversupply.
But then you look around, and something's off. I mean, despite all this abundance, the aisles are practically empty. There's hardly anyone here actually looking to buy anything. So what happens when you have tons of supply and basically no demand? Well, something's got to give, and that something is the price. Prices start to drop, and they are dropping fast. And this, right here, is where the trouble really starts.
All right, let's zoom in on one part of this market to see exactly how this is playing out. We're going to head over to the yam stalls, where, well, there's a big problem brewing.
Okay, so just yesterday, a yam would have cost you 5 notes. Pretty standard. Sellers were making a decent profit and everything was humming along just fine. But today, in just 24 hours, that same yam is down to 3. That is a massive drop. And you could see the worry on the sellers' faces, because what if tomorrow it's even lower? Now here's where it gets really weird. You'd think people would be rushing in to snatch up cheaper yams, wouldn't you? But that is not what's happening. Instead, everybody starts playing the waiting game.
And this is the thought that gets into everyone's head. Why would I buy for 3 today when it might be 2 tomorrow? Or, hey, maybe even 1 the day after that. This waiting game is the absolute heart of the problem.
All right, Coach K's calling a quick timeout here. Before we see what happens next in our yam market, let's put an official name on what we're actually seeing. What we're watching unfold is called deflation, and it's not just one thing getting a little cheaper, it's a widespread, continuous drop in prices for lots of things. The same exact yam, a lower and lower price day after day. Okay, this is where it gets really dangerous. See, deflation isn't just a one-off price drop, it actually feeds on itself. It creates this nasty downward spiral that can be incredibly difficult to pull out of. So here's how that loop works. Step 1, prices fall. That makes consumers wait, right? They expect even better deals tomorrow. Step 2, all that waiting makes demand just collapse. So, step 3, with nobody buying, sellers get desperate. They have to cut their prices even more just to get anyone to buy. And boom, we're right back at the beginning of the cycle, only worse.
So why does this matter so much? The crucial thing to understand is that this isn't just a headache for the yam sellers. This little story happening in the market, it's like a miniature version of what can happen to an entire economy. This quote from one of the vendors really says it all. The stuff they're selling is now worth less than what it cost them to get it in the first place. I mean, no business can survive for long if they're constantly selling things at a loss.
And this chart just shows you the result perfectly. Look at the bar for yesterday. Lots of activity, a bustling market. Now look at the bar for today. It's tiny. When people stop spending, money stops moving. The entire market just grinds to a halt. And if this keeps going, the problem spreads like a virus. Sellers just stop showing up. Farmers look at the prices and decide, you know what, it's not even worth growing yams anymore. And when they cut production, the workers who depend on that whole industry, they start losing their income. Everything just slows down.
So after watching this market just seize up, let's circle back to the main lesson from Coach Kobo. What is it that's really driving this whole dangerous process?
Well, it really boils down to those 3 things we saw right there in the market. Number 1, too much supply. Number 2, not enough demand. And the real kicker, the third piece, that waiting mindset. It's the expectation of lower prices that completely paralyzes the economy. And that really leaves us with the big question, doesn't it? The yams are still perfectly good yams. The value is there, but the entire economy has frozen just because people expect prices to keep falling. It really makes you wonder, if everyone is waiting, what on earth is the trigger that finally convinces them it's time to start buying again?